Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 29th, 2025, and we're diving into Mondelēz International's Q1 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Mondelēz International, a leader in the snacking industry with iconic brands like Oreo and Cadbury, has just released their first quarter results. Let's delve into the details.
Revenue and profitability overview. Let's start with the top line. Mondelēz reported net revenues of $9.313 billion, a slight increase of 0.2% from the previous year. However, organic net revenue grew by 3.1%. John, what are the key drivers behind this growth?
The growth in organic net revenue was primarily driven by higher net pricing, which offset the unfavorable volume mix. Despite the challenges posed by currency fluctuations and the divestiture of their gum business, Mondelēz managed to maintain a positive trajectory in their core categories.
And what about profitability? The adjusted EPS came in at 74 cents, which is a decline from last year. Can you explain the factors affecting their earnings?
Absolutely. The decline in adjusted EPS by 18.3% on a constant currency basis was mainly due to higher input costs, particularly cocoa, and increased interest expenses. However, the company benefited from fewer shares outstanding and lower taxes, which helped mitigate some of the impact.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Mondelēz's gross profit margin decreased significantly to 26.1%. What were the main challenges here?
The decrease in gross profit margin by 2,500 basis points was largely due to unfavorable changes in mark-to-market impacts from commodity and currency derivatives, as well as higher raw material and transportation costs. Despite these challenges, Mondelēz has been focusing on productivity improvements to manage costs.
Looking ahead, Mondelēz reaffirmed their outlook for 2025, expecting a 5% growth in organic net revenue. How does the company plan to achieve this amidst the current economic conditions?
The company is confident in its strategic agenda, focusing on pricing strategies and leveraging the strength of its global brands. They are also navigating the volatile environment by staying agile and committed to delivering sustainable shareholder value.
Capital return and strategic initiatives. John, Mondelēz returned $2.1 billion to shareholders through dividends and share repurchases. How does this reflect on their financial strategy?
This significant capital return underscores Mondelēz's commitment to rewarding shareholders while maintaining a strong balance sheet. It also highlights their confidence in the long-term growth prospects of the company.
Additionally, Mondelēz is investing in an ERP system implementation. How is this expected to impact their operations?
The ERP system implementation is part of their strategic initiatives to enhance operational efficiencies and streamline processes. While it incurs costs in the short term, it is expected to drive long-term benefits in terms of cost savings and improved data management.
Key takeaways. In summary, Mondelēz International has shown resilience in Q1 2025, with a slight increase in net revenue and a strong focus on strategic growth. Despite challenges, their commitment to shareholder returns and operational improvements is evident. John, any final thoughts on Mondelēz as an investment?
Mondelēz remains a solid player in the snacking industry with a robust portfolio. While they face headwinds from cost inflation, their strategic initiatives and strong brand equity position them well for future growth.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Mondelēz's performance in the comments below.